Hello, everyone. David Morgan, and I'm welcoming you to day two of the Metals Investors Forum. It's always an honor to be with Metals Investors Forum. I'm going to get right into it. This is, as you know, David Morgan from the Morgan Report. That's the disclaimer. I'll read it to you, but the key point is I don't profess to be a professional investment advisor, although I've worked under them at times. So May 2024, things are really starting to heat up in the resource sector, particularly the gold market that has started to make new all-time highs again and again. And I want to start off like I did a year ago in May and talk briefly about the junior mining cycle. This is called the Lassonde curve, and it's a very important thing to know for any junior mining investor. And these are speculative investments. And this shows you the normal cycle. So as you can see from the left side where the project begins, it's a very high risk. And you see the word discovery. So in this case, the Lassonde curve is showing the discovery is made or perceived discovery. Sometimes these companies can get ahead of themselves. So you get almost a parabolic move up, and then you explore, you drill out, you eventually get to feasibility and all that. Notice the red line here that comes straight down, and that is the project fails. Now, the failure rate for junior miners is greater than the success rate. And that's what makes this so exciting. But it's a question of management of capital, knowing the people, knowing what the burn rate is. There's a lot of things that go into it. There is no magic formula. So what we teach at the Morgan Report, as I said last year, is money management. At the beginning, you use money you can afford to lose unless you have, some great insight or intuition or whatever. Because we do see that you get this over enthusiasm when you get a big discovery. And that's what you want to sell into. And this is what we teach. And it's not just me, it's many people here that are my colleagues. And we call it a free trade, which means if you buy into a stock at 12 cents, it doubles to 24, 25. It's a good idea to sell half and get your original capital back. That way you're in a no lose position. You've got your original funds back and you ride the rest for free. Well, that's what that's all about. This is a little more sophisticated curve. It has a little bit different look to it, although the general idea is the same. You start off at a very low price. This shows $1 as an example. It goes up to 10. And then even though it's a discovery, it backs and fills. And this can take a number of years, this cup formation here. And I did this with Mines Management. We brought that stock at about $1 or so. It went up to 10. I put a stop loss at 8. Everybody should have gotten out at 8. And then I thought we were about here where my cursor is and ready to launch up. And we didn't. I mistimed it. And I waited. It was a long, I think I waited 4 years, maybe 5. And it did get bought out by Heckler. People made more money, but nothing like on the discovery phase. So you just want to keep that in mind sometimes. But this curve shows that it continues from the discovery move even higher and higher and higher. And that's true, but not always. So I just want you to think about the two curves, what works best for you, and either do your own homework or, subscribe to somebody such as myself or whatever. I don't put a lot of money into the juniors myself. And one last thing before I move into more about the silver market is if you are financing some of these companies, that's a little bit different game. There's more to it, and I'm not going to go into it here, but there's a different method by going into financings than there is into just junior mining speculators. So bear that in mind. So some of what I've said might not apply to someone that's doing a flow through or is a professional investor or even an amateur but very sophisticated investor knows what they're doing. Because in that world, if you do enough, the odds are actually in your favor doing financing. So I'll leave it there. I want to come back to one of my favorite charts that I've talked about many, many times. And this, of course, is the inflation-adjusted chart from 1998. This is when Warren Buffett bought silver, and he bought at basically the low of the market back over here. This was the inflation-adjusted low of all time. And then, of course, silver went up and purportedly sold around the $9 level. I've heard different numbers. It's a fascinating story. But what I want to point out is the all-time inflation-adjusted high. So this is in constant dollars. Now, we'd have to adjust from 1998 to 2024, but the purpose of this is it's all apples to apples. So you're looking back here at the 13th century at $400 silver. So when you hear those numbers now, um, it's already been there in the past. Now, not that that means it's going to be there. Past results being known to guarantee for future gains. Here's the all-time high. It was in the year 1477. It was $800 an ounce. So if you adjust the 800 to 2024, that's actually about 1,000. So when you hear some of these people talk about 1,000 ounce silver, it has been there. Will it get there again? I am not going to say. I doubt it personally. But I just want to point out that when silver and gold were money, the gold silver ratio is here. And it never got above 20 until it was demonetized here. And then it started doing these things where it got over 100, got to 125 a couple once in during the illness in March of 2020. So it's something to bear in mind. It's just one of those things about this market that you have to be aware of. And excuse me. And so we want to look at where we are in the market. So we know that silver is undervalued on any metric, but we also want to look at how these markets move. And what you'll find is there's really three phases. I don't like the way this one's drawn, but you've got the stealth phase. You might have called that in the year 2000 was gold at 252 all the way up to, maybe 600 or something. And then there was an awareness phase, and that's when we got up to almost $2,000 gold in September 2011. And then we had this long phase. It doesn't show on this chart, but it was this really long, long wait until we're back up now, back to the point where we went in this bear move. But now we are back up making all-time highs. And we are about right here on this curve. In fact, I'll go ahead and use the pointer again. It's a little difficult. I don't use this often, but it's a nice tool. And so we are about here right now. And we've got this huge move to the upside. And I'm almost certain that will happen. And this scale is not determined by this graphic. I would say it's probably a 2 or 3 year distance from this point where we're at right now in May 2024. So say May 2025, May 2026, maybe May 2026 to May 2027, we may be in this area. Could be faster. What I do know is that the last phase of the market is the one that yields the highest results as far as capital gains are concerned. And also it's the shortest in duration. That's where I get the 90% of the move comes in the last 10% of the time. You want to sell in the strength. You don't want to be an amateur and try to get the very tippy top up here. It's impossible. It doesn't happen. Unless it's pure luck, it just isn't going to be there. You want to sell in the strength. And we, of course, will be giving our thoughts as the market progresses, but we have a long ways to go. We're just getting started in the most exciting dynamic phase. And so coming back to the juniors for a brief moment, the important thing to realize is when you see this greed word here, that's when the public comes in. So public comes in, they get greedy. And this is where you can make a lot of monies in the juniors again. You can make a lot in the stealth phase. And then in this middle phase, they don't do that well unless they make a true discovery, but they really get beaten up. There's a lot less companies going out there exploring and all the things that we've been through. Now we're here, it's going to come back. Once we get part the way up this curve, you're going to see a lot more money freed up to come into the sector. A lot of people are going to be speculating, looking at projects that maybe they resurrect or new ones or different areas. So be advised that there is a time that they will come back. But if you're doing it now, you just want to be a little cautious as always. You don't want to come after the peak. So you want to sell it. That's the main point. So looking at that cycle that we went up in the third phase, 90% of the move in the last 10% of the time, this gives you a pretty good idea of what some companies have done in the past. I mean, if you look at, the percentage gains in Fannie Mae, 13,000%, Poseidon Bubble, 35,000%, e-digital 45,000%. These are similar to Bitcoin type returns that have happened. And of course, Bitcoin, I don't know where it's at. It's at the top of this, I guess. But the point being is that when we saw silver and gold go up in the 1980s, we're going to witness something similar. Are we going to be there again? We don't know. What we do know is that we have a long ways to go. And I wanted to present the fact that a lot of these markets get very, very overextended. And I believe that the precious metals will this time, because I believe there'll be not only a greed factor, but a panic factor, because the currency markets will be having what I call currency wars or currency uncertainty. And that's why you see so much crypto of so many ideas about crypto markets and decentralized money and all the things that happen at the end of great inflations, because people naturally look for a place to park their money that they feel safe in. So this is my favorite chart, and this is silver demand, and this is showing the red line where we have mined and recycled silver. It logs out at about 1 billion ounces. And then you can see all the other elements of brazing, silverware, semiconductors. By the way, semiconductors are 50 million ounces of silver a year. Solar is in the like 130 million, 140 million, depends on which study you look at. But you combine them all, it shows it on this chart. And so we had this chart when it was updated, shows in 2022 what we just saw on the latest silver survey. And that is we were about 200 million ounces shortfall in 2023. And so this actually could be shifted up, and it should be shifted up. But the point is that we are in a deficit for the foreseeable future. And that's based on a constant amount of investment demand, which I would argue is incorrect. I think we're going to see a very large investment demand over the next 2 or 3 years, as I outlined before. And I'll make the case on that even stronger. First of all, here's the projected deficit to follow. And, again, 2023, this should be updated. This was last year's Silver Institute. The new one just came out. This chart needs to be updated, but the number is actually way down here. So I think you can just kind of slide these down a little bit. This would be very conservative. It's probably much more than this. But regardless, you get the fact that year over year over year, the deficit continues to grow. And this is my second favorite chart, because if you listen to some of the pundits that, my colleagues will be listening to later today, what you heard yesterday, and people that are really in the know about the financial system and what's the major, major problems with a debt-based monetary system with a debt that cannot be paid back, is what happens to the capital that gets scared and decides to flee into where it's treated best and has the best place to protect it. And that's traditionally been the precious metals. Obviously, the cryptocurrencies are taking some of that market. But the point is, how much investment is there in the gold and silver markets? This is from Incrementum. And you can see in last year's Incrementum study, the idea is the total investment of gold holdings was about 1%. Silver, it's about 0.02%. So in layman's terms, and probably the best way it's been expressed is by Tavi Costa of Crescat Capital, he said there's roughly $5 trillion, quote unquote, sitting on the sidelines in cash, in money markets, in T-bills, waiting to go to a place, an investment. And if you take 1% of that 5 trillion, you come out with 50 billion. 50 billion is 2 times the entire silver market. The silver market is a 1 billion ounce market. It's $25 an ounce. It's 25 billion. 2 times 25 is 50. So 1% of the capital waiting to go somewhere, moving into silver, would actually buy up 2 years of silver supply, recycling and mining. And I think that that's a conservative number, that as things progress down the inevitability, in my mind, of the destruction of a fiat currency system on a global basis that really has never happened before. That some of that capital will move into the precious metals. A lot of it near the end of the cycle, as I showed on that curve that goes almost straight up, that 90% and 10% of the time, moves into silver because what happens with gold is it becomes very newsworthy. You get the Jim Dines just called the my. My, isn't gold rising? My, gold continues to go higher. But it gets to a point where most people can't really afford it. A gold coin might cost, say, $4,000 or $5,000, and some of it would be prefer to buy, whatever it would buy at the time, a quarter bag of silver dollars and have several coins rather than one gold coin. So what happened in the 1970s to the 1980 top was just that. The last few months of that market was driven by investors panicking into the monetary metals. And most of the money in the last few months actually went into silver. Hunts had actually quit buying. They had just were riding the ride up. And yet a lot of people came in after them, like it showed in that chart of the public buying. So that's a front page of the Morgan Report. I have got a special going on the website right now, themorganreport.com. If you sign up for the premium service, I will give you a 1/2 hour consultation with myself. If you're at the Metals Investors Forum and you decide to try the premium service, I will sweeten that deal by not only a 1/2 hour consultation, I'll make it an hour. And I'll go beyond that. If you want to divide it into 2 1/2 hour sessions, I'll even do that. If you sign up and you're getting it from the Metals Investors Forum, just let me know. Call the office, text us, or we do have a text service. I don't think it's two-way. You could call us or you can email us and just say, I'm buying the TMR. And it's a money back guarantee. So you could have the 1/2 hour consultation or 1 hour if you're MIF. And if you, after that, get the reports, read back, 3, 4 months, get kind of the swing of things, see how we do things. And it's not for you, let me know. We will refund your money. So you would end up with the consultation for free, no hard feelings, and move on. So that's my special offer for the Metals Investors Forum. So now the two best places to find us really are our Twitter account, and it's at Silver Guru 22 on X or Twitter, whatever you want to call it. So coming up next, I'm going to be talking about electric royalties. We have favored the royalty companies in the Morgan Report for quite some time. There's several reasons for that we've written about. I won't belabor it now, but we'll be talking about that later today. Greg McCoach, a colleague, and it's been a while, Greg. Good to see you. We'll be bringing on another company as well. And I will be available, if you wish, after this presentation. If you wish to contact me, obviously you can through the website. And if you want to ask me a question, you can reach out to support@themorganreport.com. Just be sure to put in the letters MIF in the subject line so I can tell my staff anything with MIF to forward it on to me. Again, if you have a question, write support@themorganreport, put MIF in the subject line,